Can you imagine making 76% return in a single day? Well, this could happen to you if one of your stock getting into a merger or an acquisition. Dividend investors, bonjour. My name is Mike Yeru, and I am the founder of Dividend Stocks Rocks, and I'm a passionate investor. I host this YouTube channel to help you invest with more conviction so you can enjoy your retirement. And today we are going to talk about mergers and acquisitions, but most importantly, what you should do whenever it happens. So, a couple of weeks ago, I wake up, open my Twitter account, and then one of my friends on Twitter says, "Mike, you did it again." And I'm like, what did I do, right? And then he sent me the press release. Intertape Polymer stock price surged by 76% in a single morning. So what happened? Well, obviously it got acquired. Actually, it just announced that it agreed to be acquired with a nice premium. So if you were a Intertape Polymer shareholder as 208 DSR Pro shareholders that had this stock in their portfolio, I want to say congratulations to you. In January, Intertape Polymer was on our Mike's buy list at Dividend Stocks Rock. So every month we provide some fresh ideas, and it's the second time this year already that we are lucky enough, I'd say, that we select a stock that is going to be acquired. So the first one was Activision. This one is Intertape Polymer, and this one, let's just say, at 76% in a single day of profit, that was quite good. But before you celebrate, it's important to understand what is really happening right now, right? It's not just Intertape Polymer writing you a check. So the first thing you should do when you see one of those stock price jump like crazy is to look at the press release. So go on the company's website, select the press release section, and look at what is really happening. So I highlighted a few places that I've looked when I opened the press release. The first one, obviously, nice summary, nice and clean, because the company is proud. They just want you to actually vote for the transaction, because you got to vote for that. And they're telling you Intertape Polymer is going to sell at 2.6 billion or $40.50 a share. Now, if we go back 1 second to the previous stock price chart, you can see that the stock price is not going up to $40.50 right away. It's actually trading around 39.50. We're gonna get there in a second, but just keep in mind, you're not gonna get the right price right away. Why? Because you have to continue to read that press release. If you go down a little bit further, then you'll see that first, the board is unanimously accepting this transaction and tell shareholders that they should also accept it. So all those transactions for merger and acquisition, they go through a process where shareholders have the rights to vote. They could say, no, we don't want $40 for our shares. We want to keep it at 25, right? Well, I don't think it's going to happen in this case. So basically, you're going to have a vote, and then they're telling you the transaction is expected to close in the third quarter of 2022. So roughly, you'll have to wait about 6 months to see if everything goes through. And as usual, it is subject to regulation and a court approval. So they just want to make sure also in terms of competition, if there's not a monopoly that is being built. So now, you know the price, you know the regulation and the rules, and you know when the trade is supposed to be closed. Now you have two options with this information. Option number one, you sell, you take the money, and you run. And actually, sometimes that could be quite interesting, especially on this one, because the market is pretty much telling you they expect the transaction to close because it got very, very close to the buying price. If you remember, a few years ago, Cineplex was supposed to be acquired right before the pandemic. So people saw their share price surge in a single day. They were all happy, but some of them decided to wait. What happened? Well, kind of crazy, but we don't know the future, and the deal has not settled yet. And then boom, pandemic happened, and the transaction might not go through anymore. So stock price plummeted, and those who had waited to get a little bit more greedy to get that extra few bucks, they would have gotten until the transaction closes. Now they lose it all. So option number one, you sell your stock, you get the money right away, and then you move on. Option number two is you could wait until the transaction closes. Even though you don't want to sell your shares, if a majority of shareholders votes for the transaction, you will have no other choice but to receive the money from your broker, and then the shares will disappear from your account, because the transaction in this specific case means that the shares of Intertape Polymer will be delisted from the stock market. So you will not be able to trade them anymore, because the transaction is the company is going private. It's not public anymore. So in that case, shareholders votes for, they sell a majority of it, so then everybody has to sell. Now, why the stock is not selling at 450, right? 400, that would be nice, huh? At 40 bucks and 50 cents right away. Well, this is because there is still some uncertainty, and there's also the time before the transaction closes, so you have to be rewarded. So in this case, we're talking about roughly $1 of premium if you sell in about 6 months when the transaction will close. So $1 on $39, it's about 2.5%. So 2.5% return in the next 6 months, or 5% on an annualized base rate. So basically, this shows you the difference between selling today and then starting to generate money with another investment. So do you think you can generate more than 2.5% in the next 6 months with your money invested in another stock? Or you keep going and then you get that 2.5% extra, but you have to wait 6 months to get it. The other thing is, as I just mentioned, sometimes transaction will not go through for plenty of reasons, not necessarily just the pandemic, obviously. Sometimes regulation will say, oh, we're going to put a stop onto that transaction, or we're going to force some modifications because it's not fair, or there's like antitrust laws and stuff like that. And for that reason, the market on this one is telling you the likelihood that this transaction is going to happen is very high, because there's not a big premium between the stock price that you can sell right now and the stock price that you can sell in 6 months at the term. In this case, for myself, I had Intertape Polymer in my portfolio. I sold my shares and moved on. Actually, I bought Granite REIT. Mostly because it's my favorite REIT, and also because I think I'm going to make more money than that 2.5% right away, and I rather not wait. However, let's end this video on the other transaction that happened a few months ago that was also on our dividend stocks rocks buy list, which was Activision Blizzard. So Activision Blizzard was on our buy list, and then poof, the stock price jumped by like 40-something%. However, Microsoft announced that they wanted to buy Activision Blizzard at 95 bucks a share. But the stock price went up to 80, 81, 82, like nothing close to 95 bucks. So how in one case you have Intertape Polymer trading very close to the closing price, and this one there's another 18% premium that you can make if you buy Activision Blizzard right now and then you just wait until the end of the transaction when it closes. Well, the first thing, it's time. Remember, I just told you time is money. Well, there's the thing, the transaction is not expected to close until next year, so 2023. So you'll have to wait maybe 12, maybe 14 months until a transaction closes. So that time has some value. Is it enough to justify 18% like guaranteed return? I don't think so, but because it's not guaranteed return, that's the other thing. In this specific case, we all know that the regulators are looking at all the technology sector deals. They got a bad press with deals like Facebook buying Instagram and then just buying their competitors to cut the grass right away, below the foot of their competitors. So they're kind of scared now that those kind of mega transaction could have a major impact for consumers. So they're going to look at this transaction a little bit deeper than usual. So the market is telling us we are not quite sure that the transaction will happen. So in this specific case, this is quite tricky. So are you going to sell your shares with a nice profit? I mean, I'm making like 45-50% return on my trade on Activision Blizzard, but I could make another 18%. And considering the volatility of this year and the stock market overall performance, I'd say that 18% in a year could be pretty good, right? But the thing is, I also have to take in consideration the risk that the transaction will never go through. So where I'm standing at here is I wanted to buy Activision Blizzard because it was an amazing company. I actually described that company not too long ago in a previous video, so you can take a look at it. But I was thinking, you know, they had bad press, they had bad management behaviors like harassment and all that stuff. But I believe that this company can clean that up, and it's not a good reason to penalize thousands of employees that have nothing to do with that. Great games that they're building. They have like such amazing franchise like Call of Duty. They have like recurring players that will go there month after month to play their games. So I was thinking this is a great value play. So I'm gonna hold on to my shares, and regardless if this transaction goes in or out at 95 bucks, I'm still going to be happy because I think that there's value in this business. But then it all goes back to your investment thesis. Do your own due diligence. Don't be blinded by the premium that you can make, but rather make sure that you would like to have Activision Blizzard in your portfolio for a long time. So then if the transaction doesn't come through, you're gonna still be happy. So this is actually the kind of transaction that we discuss at Dividend Stocks Rocks in our newsletter, and then sometimes we got very lucky and we got those stock on our buy list. It's a mix of talents and chance, I would say, but in this case it was very profitable. So as a summary, what you should do whenever you see the stock price goes up like this, go look at the press release. Make sure you understand the deal. Ask questions just to make sure. What is the price? Are you going to receive cash or stocks? Because sometimes it's a mix of both. Sometimes you're going to just receive shares of the other company. So then you have further analysis to do when the transaction will close, and what are the risks of this transaction to go through or not. So what are the likelihood to happen? So once you have determined all of those, you go back to your investment thesis, you decide if you want to keep that stock forever or you're getting a very good price, and then you sell and you move on. So those are the steps that you should take before you decided to take a stand on a merger and acquisition. So then again, I hope that you have enjoyed this video. If it had given you any value, give me a thumbs up, follow me, subscribe. Every single week we're having a new video. And actually next week, I'm going to talk about a stock that could be potentially be acquired at one point because it's a small cap, it has no debt, and it has a dominant market share in a specific niche market. So very exciting stock here, and you want to see that next coming week. Until then, don't forget to stay invested.